Hello, everyone, and welcome to Florida Data Science Academy. I'll be your instructor, Dr. Dylan Sinnickson. And today's tutorial, we're going to be going over the Ark Invest Tesla valuation model. So you're probably familiar that Ark Invest and Kathy Wood have very high expectations for Tesla over the next 5 years, and they also make their models publicly available. So I decided to download their model and actually take a look under the hood of how they're calculating Tesla's stock price and how they're estimating certain input variables. So open on this tab, you can see that we have the Tesla valuation input. So this is an Excel sheet that has a variety of different tabs. We're probably going to be working mostly with the Tesla valuation inputs tab, but let's also move through this model. We have a Monte Carlo simulation output, we have a Tesla test example, and we have a Monte Carlo single simulation. So what is a Monte Carlo simulation? Well, essentially, if we work with the Tesla valuation inputs on this first tab, we see that there are 55 different variables that Ark is using to inform their model that predicts a variety of different output variables, which eventually gets us to our stock price. So all of these estimates that you see in blue, these are relative estimates or distributions that Ark Invest has input into the model based on certain calculations. We don't have them here based on their own research. And then we're using those input variables, those estimates, to eventually predict stock price. But as you can tell, we have these aren't single values. These are generally ranges of values. So for example, we can work with the maximum gross margin, which has a minimum value of 20%, a downside of 40%, an upside of 60%, and a maximum of 80%. So in a Monte Carlo simulation model, we're going to be randomly selecting parameter estimates within that range. We're going to be for all of the different 55 variables that we have here, we're going to be randomly selecting variables within those given ranges that we're going to run those simulations 5,000 times, and then we're going to eventually calculate a stock price and then take the median stock price from those 5,000 simulations in order to get an estimated stock price for Tesla. So let's work first with this Monte Carlo simulation output. So when we're on this tab, we can see that we should have 5,000 rows, which indeed it does look like we have. We can scroll all the way down to the row 5,000. And it looks like we have 5,000 simulations. And then we're going to be calculating a maximum gross margin, a maximum annual production, a robo-taxi launch year. And these are going to be results from the Monte Carlo simulation, where they're going to be randomly selecting parameter estimates within the ranges that Ark Invest has distinguished. And then we're going to be eventually calculating a stock price from that is calculated both from those predictor variables as well as a variety of different output variables. So if you're interested in the calculations for the stock price, we can move on to this Monte Carlo single simulation tab, or you can also use the Tesla example valuation tab. And then if we move from, I believe, rows 57 all the way down to row 157, we see that we have a variety of different output metrics that are calculated by the given formulas that we can see are in the formula bar. So for example, we have metrics of working capital, average interest paid. We have I believe 100 different output variables. And then eventually we're going to calculate a stock price. This is what we're most interested in. And it looks like in this scenario, we have a stock price of 4,237. So something that we need to account for in this model. This model was built in 2021. This is before the Tesla stock split, which occurred in early of 2022. So we need to adjust for that stock split. So any of these stock values that you see in their model, we're going to have to divide by 3 in order to account for the stock split, which occurred earlier this year. So when we see, we can look on rows C, D, and E of the Tesla valuation inputs. And we can see if we divide by 3 to account for the stock split, it looks like Ark is predicting in an expected case, a stock price for Tesla of a little bit over $1,500 per share. In a bear case, a little bit over $900 per share. And in a bull case, we're seeing just under $2,000 per share. So what I'd like to do in this tutorial is essentially work with these key drivers. So the key drivers we see are the maximum gross margin, the capital efficiency, the maximum annual production increase, the maximum percent of 2026 production that's sold into the ride-hailing network, and whether or not robo-taxis are launched and what year that occurs. So I'm going to work with these 5 variables, and we can see in the blue text, again, this is the parameter estimates that Ark Invest believes are a realistic range. And then I used my own sources to kind of check the estimates or the ranges that Ark Invest was using and see if I use the parameter estimates that I've estimated from my sources changes the values of Tesla stock price when we're working with these 5 key drivers. So now what I'm going to do is actually move to this other Excel spreadsheet that I've developed. As you can see on the left-hand side, we have the Cathie Wood Ark investment parameters and the stock prices, and then we have the parameters and stock prices from Florida Data Science Academy. So we can see on rows 4 and 5, we have the unadjusted stock prices for Tesla, and then we have on rows 10 and 11, we have the adjusted stock prices. Again, we're just dividing by 3, and we have in column J, we have the current stock price. In November, we have Tesla's valuated $195 per share. And then we see all of the Cathie Wood Ark Invest parameters for maximum gross margin. We have our capital efficiency. We have a maximum annual production increase. We have a maximum production of 2026 production that's sold into the human-driven ride-hailing network. And then we have whether or not robo-taxis are launched and what year that is going to occur. So we have, for example, for maximum gross margin, we have percentages ranging between 20% and 80%. For robo-taxis, we have and the earliest that's going to occur is 2022, on a downside 2026, upside 2023, and a maximum year of 2030, and so on. We can move through all of the different parameters that we have for these different variables. So on the right-hand side are the parameter estimates that I've developed from Florida Data Science Academy. And you can see that I've actually color-coded a couple of the parameters that I found different values from different sources online that were somewhat different from the ones that Cathie Wood has provided. So for example, maximum gross margin. So we can go to the color-coded green cell, and I was on macrotrends.net looking at the historic gross margins of Tesla, and I was seeing differences than the estimates that Ark Invest has been providing. So historically, Tesla has been demonstrating gross margins ranging between 15 and 30%. Cathie Wood and Ark Invest said that in a minimum case, their maximum gross margin would be 20%. In a high case, it'd be 80%. But historically, I have seen Tesla have lower gross margins than that. So we are working with a maximum value. So Ark Invest works on a 5-year time frame. So I'm assuming that they think when they say maximum gross margin, that's going to be the highest gross margin that occurs between 2021 and 2026. So because historically we've seen 15 to 30% gross margins, I bumped it up a little bit, and I used a minimum value of 20%, a downside of 28%, upside 35%, and a maximum value of 40%. I actually didn't change the capital efficiency values that Ark Invest has used, but I did change the maximum annual production increase. So recently, I believe Tesla has had their highest annual production increase. This occurred in Q3 of 2022, and I believe it was 55%. So I was looking at the Ark Invest values, which range between 20 and 200%. So I did decrease those values. In my model, I'm using parameter estimates of 20% on a minimum, a downside of 45%, an upside of 75%, and a maximum value of 100%. And then the last 2 cells regard the taxi ride-hailing networks that Tesla has spoken highly of. The first one is the human-driven network, and then the second one is with respect to the robo-taxis. So with respect to the robo-taxis, we do see that Ark estimated that the earliest that this could occur is 2022. Obviously, I have a year of hindsight that Ark Invest didn't have when they made this model in 2021. Currently, there are no robo-taxis that have been launched, and so I did change some of the estimates of when this launch date for this program would occur. So we can move to the other yellow color-coded cells, and I provided a link from IoT World today, and this is basically a press release from Tesla that said that the earliest that this is going to occur is 2024. That's when they predict that the robo-taxis will be launched. So generally, companies will overestimate when they're going to launch a certain program. They get very excited. So I used a minimum value of 2024. That obviously is 2 years later than Cathie Wood's 2022 estimate. So I just bumped up the years for each one of these robo-taxi launches from the ones that Ark Invest had provided in their model. And then we can also work with the maximum percent of 2026 production that's sold into the human ride-hailing network. So in general, I just decreased these values from 30% to 20%, 60% to 40%, and then 70% to 55%. I didn't have a reference for that one. I'm just using generally that I think maybe Tesla has maybe overestimated or their excitement for their ride-hailing networks. We haven't really seen them be implemented. So I just decreased some of those values that Ark Invest had been using. So what we're going to do is now essentially we're going to take the values that I've provided, and then we're going to input those into the model and see how the stock price for Tesla changes based on the model that Ark Invest has provided. So if I move back to the Tesla valuation model, I can go into this valuation inputs and then just copy and paste, we can use paste special, my cells into the key drivers. And we can see that the stock prices don't change, and that's because we actually have to use the calculate now function, which is in your search tab. So if we go use calculate now, this should take approximately 10 seconds for the stock price to actually change on cells C, D, and E. And you can see that when we input these new values that I've been using, we see that the expected stock price, again, this is pre-split, goes from 2,100 to 1,500 to 2,493. So let's actually just copy and paste these cells. I'm going to copy them. I'm going to move back into the Excel sheet that I've been working with. So I'm going to paste those values into these cells. Use paste special, and it might take a second to load, but essentially what I'm going to do is we have to adjust for that stock split. So this $2,100 value is going to go to 700, the 1,500 pair case will go to 500, and that bull case will also we'll need to divide that by 3 as well. Looks like we're having now Excel decided to work. All right, so I'm just double clicking on here, and now Excel is loading those values. So we can see that the expected stock value in 2026 is $700 a share using the model inputs that I've worked with. In the bear case, we have a $500 per share, and in a bull case, we have an $831 per share. As you can see, this is different than the values, significantly lower than the ones that Ark Invest and Cathie Wood has been using. But I'm sure they have a lot of research that they've been working on to substantiate the parameter estimates that they used. Obviously, I have a couple sources that were informative, but Ark Invest is highly established in their research prowess. So I'm sure it would be very interesting to hear from them to see how they got those parameter estimates that they've been working with. But these stock prices that I've been working with were significantly lower in this model. Again, I am not a financial advisor. Please do not take any of this information as formal financial advice. Do your own research and invest at your own risk. But we can see that the model that Kathy Wood and Ark Invest has provided is very transparent, is very helpful for independent investors in order to maybe change certain parameter estimates and be able to work with their model and to see how Ark Invest is actually evaluating a lot of the companies that they speak highly of. So I'm actually going to provide these two Excel files on my website, Florida Data Science Academy, so you guys can check them out. And you can also download the Kathy Wood Ark Invest model on their GitHub site, and they make that publicly available. So all of their investors can download their models on their GitHub, but I will provide both on the Florida Data Science Academy website. And thanks a lot for your time, and stay tuned for more Florida Data Science Academy videos. Thanks.